Hello, my dear students. Today we shall be discussing a very interesting and a very important standard, SA 210, which speaks about agreeing the terms of engagement. Now understand, my dear students, that SA 200 has told us the overall general objectives and that whatever audit is going to be conducted, it should be as per standards on auditing. Okay, then now after bearing that in mind, when we discuss with a client and when we agree at the same time, that is we come to a same level, that is we are ready to accept the engagement, at that time comes the question of SA 210. When we speak of SA 210, it is divided into two parts. First speaks about preconditions of audit, the background that needs to be present, okay, while accepting the audit. And second is the understanding between the auditor and the proposed auditor and the management. If everything goes well, the letter of engagement is given by auditor to the management as an acceptance. Okay, yes, come on, let's quickly solve MCQs on this very important standard. Seems to be very simple, but it is very tricky, and we shall have a demonstration of it via these MCQ sessions. Okay, yes, come on. Let me know all the students who have got all the answers correct, because yes, let me tell you, this is again a very tricky standard. Okay, yes, SA 210, question 20. Before thinking about acceptance and continuance of audit, auditor is required to check whether any limitations are imposed by management. Absolutely, auditor needs to check that whether management is restricting any scope, exerting any kind of limitation on the auditor, which will result in the auditor disclaiming an opinion on the financial statements. If yes, the auditor shall accept only if. Means what is the situation? Come on, let's analyze the situation. Let's convert the question into a simple way. Just 1 minute. Okay. Here I go. So the first situation is limitations are being imposed by management. Okay. And yes, you have to accept it. Okay, means in spite of the limitations being exerted, you have to accept it. When do you have to do it? Yes, when it is required by law. When law has bestowed upon it such responsibility that you have to accept it in spite of the limitations, only and only then we are bound to what? Accept this particular situation. Okay. Further, before thinking about acceptance and continuance of audit, auditor is required to check whether any limitations are imposed by management. Okay, which will result in the auditor disclaiming an opinion on the financial statements. Because if any limitation is if any limitation is imposed on the auditor, he will disclaim the opinion. Okay, if no condition is imposed, the auditor shall accept only if. What is being said? Yes, if no condition is imposed means what is they saying? What is the question? You understand the question first. What is the question? The first line is telling you that in case if limitation is imposed, yes, in case if limitation is imposed by management, check whether law or regulation requires. If law or regulation requires, you have to accept it. But if law or regulation does not impose, then you have to disclaim the opinion and you do not have to accept the audit. Right? Okay, fine. Now second sentence says, if no condition is imposed, means management is not imposing any kind of condition or limitation on the auditor shall accept only if. Prior to acceptance, as I have told you, we need to check two things: whether preconditions exist, whether there is understanding between the auditor and management. Okay, yes. So what should be the answer here? The preconditions should exist. Only and only then the auditor would accept the audit. Further, as per SA 210, precondition does not mean, my dear friends, okay, it does not mean, okay, yes, let's read the alternatives. Management should accept their responsibility regarding preparation of internal controls. Management should accept their responsibility regarding preparation of financial statements. Management should accept their responsibility regarding written representations and matters of conflict. Providing auditor with information required during audit. If we recall what preconditions mean. Yes, come on, if you have any confusion with regards to preconditions, I have also uploaded a short video on SA 210. So you can quickly go to SA 210, which you will cover in not more than 10 to 12 minutes. You can quickly listen to that standard and then come back and solve these MCQs, which will make your concept Yes, sharper and clearer. Okay. Yes. So what have we seen? Preconditions. Preconditions. There are certain preconditions related to financial statements and related to management. Financial statements. What are they? That the financial statement should be as per financial reporting framework, and it is the management who would prepare the financial statements and internal control. Okay. And management should provide all information. Right. So this is a precondition. Yes. Then internal control system preparation is a precondition. Financial statements preparation is a precondition. And providing all information to auditor is a precondition. So which is not a precondition, my dear friends? Yes, it is C. Providing, yes, accepting the responsibility regarding written representations in matters of conflict. Let us go ahead further. Now here in question number 23, there is a small typo error wherein one alternative has been repeated. Yes, I would just change the alternative for you. Okay. Which of the following is an attribute of acceptable financial reporting framework? So here they are talking about financial reporting framework, which is an attribute. Relevance, accuracy, reasonableness, or completeness. Come on, tell me. Yes, whenever we speak of attribute, the most perfect attribute is it should be complete. That the financial reporting framework should be complete. Okay. Practice that losses should be postponed till required to pay. And income should be booked as we get sale confirmation. Actually, what does prudence says? That what does prudence say? Come on. That losses should be booked as and whenever we are able to quantify them or whenever we are certain about them, right? And yes, and income should be done what? After, yes, revenue recognition is done. That is after what? Sale confirmation or when invoice is prepared. At the time of, yes, invoice, right? So here it is speaking of two opposite things, right? So it is a violation of which attribute? Come on. Reliability, relevance, completeness, neutrality. The most perfect answer here is neutrality. Neutrality attribute is violated. Okay. Yes. Come on. Let's go ahead further. Practice. See, I've told you, audit paper is just not audit. It is a combination of accounts, audit, and whenever we speak of information system, there is a small touch of EIS also. Okay. Yes. Okay. Fine. So practice that debtors and provision for doubtful debts should be netted and shown at one place is a violation of which of the attribute? Come on, my friends. Yes, tell me. Come on. Yes, let's repeat the question. Debtors and provision for doubtful debts should be netted. Means what? Actually, what do we have to do? We have to disclose what debtors. Then from that we have to deduct the amount of provision for doubtful debts. Yes or no? And then the net figure has to be written in the outer column. Okay, so what is being told here? That we have to actually deduct it directly and write the net figure in the outer column. So it is a violation of which kind of attribute? Come on. Understandability, relevance, completeness, reliability. Yes, it is a violation of understanding, my dear friends. Okay. Yes. Now practice of not disclosing contingent liabilities is a violation of which attribute? Come on. Yes, contingent liabilities is a part of notes. Yes or no? Yes. So if the notes are not written properly, that means the financial statements as per financial reporting framework are not complete. Okay. Yes. Do you understand, my dear friends? Okay. Further, suppose space research organizations are governed by special acts, which says no to preparation of income and expenditure and only requires preparation of balance sheet. Now, understand, we have seen that financial reporting frameworks may be prescribed by law also. Okay. Yes. Now, sometimes these financial reporting frameworks are acceptable or are not acceptable. Now, what is being told here? Yes, what is being told here? That first of all, tell me whether it is speaking about financial statements or audit report. It is speaking about financial statements. If it is speaking about financial statements, alternative A is not the answer because alternative A revolves around audit report. Okay. Yes. So now let us see what is it, B or C. Okay. Yes. What does the special act say? That the special act say that yes, space research organization do not prepare income and expenditure account, prepare only balance sheet. That means you have to give what? You do not have to give the performance during the year, but only you have to give the statement of affairs as on one particular date. Okay, come on, tell me, is it acceptable? Yes, is it acceptable? No, it is not acceptable. The financial reporting framework prescribed by law is unacceptable. It is what, my dear friends? Unacceptable. Those who are getting confused with it, just be patient. Let me take 2 more MCQs on it. Your concept will be clear. That is my guarantee to you. Let's go ahead to question 28. Auditor is required to comment on everything is proper rather than true and fair. Now here, focus. Now here, they are speaking about auditor is required to comment. That is, they are speaking about financial statements or audit report. So definitely B or C are not the answers. So we have to speak about A or D. Okay, so now what is the special act is saying? The special act is saying that listen auditor, do not use the words true and fair, but you use the words everything is proper. Okay, so here what will auditor do? Whatever law is saying, as per that he shall report, right? So here audit report format is given by law. Okay, yes, let us go ahead further. Okay, valuation of investment of general insurance company as per Insurance Act differs from AS 13. So AS 13, when we speak of AS 13, that is what? Generally acceptable financial reporting framework. Because what? While preparation of financial statements, it has been told to us that you have to follow accounting standards. Now, if you have to follow accounting standard, then investment would have to be disclosed as per what, my dear friends? It would have to be disclosed as per AS 13. But here, because it is an insurance company, it is having a special insurance act, we are disclosing it as per Insurance Act. Okay, yes, so here, identify to which option this example relates to. Is it regarding audit report? No. Is the financial reporting framework unacceptable? Okay, let's see the third option. Financial standards supplemented by law. Means whatever the special act is asking you to value the investments at, it is different from what? From AS 13. So there is a contradiction between them. There is a contradiction between them. Do you get it? Okay, yes. In which of the following cases new engagement letter is required? Change in nature, size, management, revision. All of the cases, yes, all of the cases, new engagement letter is required. Simple question. Now, engagement letter is provided by, come on, tell me, it is provided by whom? Management to auditor or auditor to management? It is always auditor to management or to those charged with governance. Now, engagement letter is always required when auditor is appointed, always required when auditor is reappointed, not always required when auditor is reappointed, but except for certain exceptions, right? Whenever the auditor is first appointed, letter of engagement is must. Every time is letter of engagement to be given? No. Only when there is a revision or there is change in terms or there is change in understanding, only at that time you need to again document the engagement letter. So here D, A and C is the more correct answer. Now, which of the following is, my dear friends, focus, what are they saying? Which of the following is not a term of engagement letter? Okay, yes. So come on, contents of engagement letter. What do you give in the contents of engagement letter? Yes, come on. Do you give object of audit, scope of audit, auditor's responsibilities, management responsibilities, applicable financial reporting framework, right? Then anything, peer review if required, right? Also you say what? Yes. Also, we need to disclose the format and content of reports. Yes? Okay. So, if we read the options here, object, scope, responsibilities of management and those charged with governance, fact that audit process may be subject to peer review, audit planning. Come on, tell me, at the stage of audit engagement letter, have we prepared the audit plan? Have we understood the entity and its environment? Not yet. So, audit planning is never a part of audit engagement letter. Okay? Yes? Let's go ahead further. The audit engagement letter generally should include each of the following. Okay, limitation on auditing. What are the inherent limitations of audit? Responsibilities of management with respect to audit work. Expectation of receiving written representation letter. Description of auditor's method of sample selection. Definitely sample selection comes way ahead at the time of picking up items for performing audit procedures which do not come at the audit engagement level. In which of the following circumstances a new engagement letter is required? Okay, it's a repetition of the earlier question. change in senior management, change in nature of business, change in legal requirement, all the cases you need to have what? A new engagement letter. Let's move ahead to the last question for this standard. If auditor is requested by management to change the audit engagement to an engagement that conveys lower level of assurance, then the auditor shall. Okay, means here what is management saying? Management is saying what is the management requesting? Management says that yes, auditor, you have to give a level of reasonable assurance. Okay, but please, there are certain problems, there are certain limitations on us. Okay, we do not have the required information, we are unable to provide you the provided data, so you give a lower level of assurance. Yes, would the auditor directly scrap the idea? No, he would understand whether it is reasonable to do so, whether it is justified to do so. If yes, he would give the management a chance. If not, then he would have to consider the effect of the request of management on the results of audit procedures and thereby on the audit report. Okay, so let's see what are the options. Reject the management request. At the outset, he cannot reject it. Accept, he cannot even accept it. He needs to think on it. Determine whether there is a reasonable justification for doing so. Shall not entertain any such request. Yes, so here the most perfect answer is alternative C. Do you get it, my dear friends? Yes. So this is all about SA 210. Okay. Yes, make it a point that whenever you study a particular standard, go to the, there's a playlist available to you on this channel. In the playlist, there is a revision of all the standards, and we have covered the standards in like around 10 to 15 minutes. Okay, so you can go revise the standard and then you can immediately solve the MCQs, and you can thereby, yes, confirm the marks which you're going to get tomorrow. Okay, yes, till then, take care. Bye bye, my dear students. Okay, yes, we'll meet soon again with a new essay and new journey of completing this audit paper, the study of this audit paper. Okay, till then, take care. Bye bye, and see you soon.